All right. Welcome back to capitalcompetent.com. Today, I've got a very important episode about stability in a crashing market. I woke up this morning today, and when I opened my phone, I've got a little apps. I got a little stock app on my phone. When I opened that stock app, I saw a sea of red, right? Then I open our portfolio, and what do I see? I see green. Now, we're not up a lot, right? But we are not down today. Now, why is that? Well, if you watched my last video or the last two videos, you would understand. I could not have, the last three videos could not have been put together more perfectly. My last video was about the yin and the yang, the balance, and this video today is showing you why I said that. Now, I'm not here gloating at all or saying I told you so, right? But I want you to see what I'm talking about. This is a portfolio with real money. This is a real challenge. If you are new to the channel, we are taking $105 each week, something anybody can do. I want to show you that this is possible. Building wealth is possible. This account was not this big 14 months ago, but here we are today. Okay. There are people online saying you can't afford this, you can't afford that. Yes, you can. All it takes is consistency, discipline, and putting yourself in the best position possible. Okay. Last video, I talked about the yin and the yang of investing. Okay. A very balanced portfolio. And today I'm going to show you why I say those things. I could not it could not that I was not expecting it to go this perfectly, right? Usually something small goes wrong. But let's take a look at the portfolio today and find out why we are up when other people are down today. It's the yin and the yang. That is why, okay? Exactly like I said last video, you look at the position sizing and you understand your risks and where your biggest weakness are, and you cover that weaknesses. I'm pretty sure I said word for word, if all these positions go down, my Tesla put would cover it. And what do you know what happened? It did just that. And I am telling you that is so important. Do you know why it is so important? Because you make the best decisions when you are calm, understanding, and in control, when you are not freaking out. Okay? When I see my portfolio is not down 5% in a day, I am able to look and say, I like Meta's price today. I might buy a little bit more Meta. I might add positions. And that position is the strongest possible. And here is why. If I add to positions that I already like that are on sale, instead of saying, oh no, my positions are down today, I look at this and I say, okay, this is a sale. And two things are going to happen. Either when I add positions today, when I add more to Meta, when I add more to Take Two, when I add more to gold, two things are going to happen. Either the market is going to continue to correct and my Tesla put will cover those losses for me, allowing me to buy more. Or I put a stop loss on my Tesla put, the market bounces back, and I have more of these positions, and I end up with more money anyway. This is the importance, okay? And I really like where we are at. And if this sounds too much for you, if you're a true beginner, watch this whole challenge. We started from $1,000 and now we're at 9,200, right? And this is real money. And I appreciate someone commenting on my last video. Very, very touching stuff. And I appreciate you so much for that comment. And I encourage you guys to keep commenting. Okay. This channel is not going to get a lot of attention right now. It's only at $9,200. That doesn't get attention anymore. Okay? But the thing that we offer or the thing that we can build together is true and real wealth. If you look online, okay, you see nothing but $50,000 screenshots, $10,000 in a day, okay, extreme risk. And they'll label it as asymmetric risk, where they say, oh, this position has little downside and huge upside. Except when the downside comes around, they're down 25%, and then they change their minds and they come up with something new. You don't want to play that game. Okay? That game, there are 10 huge winners that will make a ton of money. Yes. Those 10 winners will get all the attention, they'll get all the money. They won the lottery. But then there are going to be 10,000 losers that take huge amounts of risks and have to keep starting over and over and over, hoping to become one of these 10 winners. And then everyone on the internet is like, hey, you can't afford to buy a house. Hey, you can't afford to. Yes, you can. This is how you do it. This is the game. There are some things I want to talk to you about. Crashes are inevitable. Are we in a crash? No. We are in a correction. They are inevitable. Whenever there's a lot of money being made and asset prices are on the rise, people are going to push and push and push the price up until there are no more buyers. And when there are no more buyers, they're still going to try and get the prices that they were getting when there were buyers for a while until there are no buyers for a little bit. Once there are no buyers and the costs of holding on the asset actually becomes a factor, then you'll see prices correct to meet the buyer's demands. That is a correction. You're in a market. All a market is buyers and sellers. Whenever we are overpriced, it's going to stay overpriced for a while to see if anyone buys because it's worth it for the holders of assets. Okay? And but once it becomes the cost of these assets, and that includes opportunity costs, meaning putting your money to the side with nothing doing it, once that becomes too much, there's no choice but prices to come down to meet people that will actually pay for it. Okay? That's just an overview of the market. And if this is too much for you, watch the last three videos and you will understand. You will understand exactly what I am talking about. Everything will be clearer, and you will actually walk away better than when you started. Okay? That is the value of this channel. Join this channel. We are adding $105 a week, and you will see this channel, this portfolio grow. Okay? It's Einstein said it best. Compounding is the most powerful thing in the universe. Okay? You want to see consistent growth. You don't want to see these people online that show you big wins, don't come back for a while, then big wins. Some of those people spent hundreds of $1,000s just to get a $50,000 win. That's not how you do it. Okay? There will be winners in that game, yes, but you do not want to do that. This is not financial advice. This is just how I was able to do it in the best way possible. This is the most winners. I want to help you guys because I see these people on the internet and they are not giving you the best financial advice. I've got some points for you. Leverage is extremely risky if you do not use it correctly. These people online are taking huge, huge risks and they get attention for those risks. This leverage should be used to help you. For example, this Tesla put. Every dollar that Tesla goes down, which is in the S&P 500, by the way, so there's a correlation there, the yin and the yang, like last video. There's a correlation there. Every dollar that Tesla goes down, this will go up $10 to $15. I don't know what the delta is, whatever it is, I'll have to check. But it will go up more than what Tesla goes down. So if my portfolio goes down, this one position that's only 10%, that gain, as you can see, 14% in a day, as opposed to all of this probably adding up to 14%. Do you see the beauty in this? This is a balanced portfolio. This will hold up in market corrections. And when you hold up in market corrections, you are able to make the best decisions where you're in a position where either you can buy more or sell and put yourself in a win-win position. I am completely relaxed. I don't care if the market goes down. I don't care if the market goes up. I know either way I will win. That is the beauty of it. There is value in that. Even if this portfolio does nothing, I'm adding $105 each week. This portfolio will go up. It is possible. I encourage you to join in our challenge. We only have 30 subscribers right now, and we're at $9,200. I guarantee you, once we hit 10,000, 20,000, 50,000, that's when I'm going to start getting attention. But you're going to miss out on the whole ride there and learn these things that you can do yourself. Those last three videos that I made is a masterclass in what's going on right now. If you are just joining the market, it is okay if you are down. If you are in good positions, like let's say you bought Meta at $680 and at 605 and you're down, that is okay. But now you got to focus on balancing it out with other stuff. Because Meta will absolutely do a new high someday. Is it going to be tomorrow? No. Is it going to be in a year? I have no idea. But if you buy good quality companies, okay, and then you hedge and balance that risk, you will be good in the long run, okay? If you are brand new to the market, you either, a huge lesson for me was you either win or you learn. The reason that I know so much about and have so much experience is because I've lost so much money. I tried my best during that GameStop fiasco where I went in on AMC for $10,000. I lost $6,000 in a day. That floored me. That floored me for 3 days. I didn't get out of bed. But I am so happy that happened because I have the ability to do this and show you as well. I hope no one has to go through that. That was that was a terrible 3 days because I was 20 something at the time, and that was a lot of my money, was that 10 grand. That was a lot of my money, and I lost over half of it. Okay? Corrections are inevitable. It's about limiting it's like about actually limiting your downs while maximizing your ups. How do you do that? By putting yourself in the best position. But this portfolio is in the best position possible because either the market continues to correct, which means this leveraged will keep going up, or I buy, which I'm going to do. I'm going to do this, by the way. This is my next steps after happening today. I'm going to buy more of the positions I like and put a stop loss on my put. So that means if the market keeps going down, this will make more and more money and I'll be buying more. Or I'm putting a stop loss here. The new positions I added at a discount go up altogether, and then this is a stop loss at my cost basis. Either way, it's a win-win. It's beautiful. It's the yin and the yang. It's beautiful. Mwah. It's chef's kiss. And this is all possible. You can afford a new house. You can afford a new car. You can afford to buy your girlfriend a diamond ring. You can afford to add to your house. All it takes is discipline. And we're only doing it, excuse me, and we're only doing it with $105. Something anybody can do. Anybody can do this. Join the channel. This information is a lot more valuable. I promise you this. The information that I'm going to give you is 20 million times more valuable than the cost of you clicking subscribe and that bell icon. If you hit subscribe and that bell icon, if you're serious about taking control of your own finances, you don't want anyone else to do it, you want to take control of your own life, hit that subscribe button. I do not post every day, but I will pop up and I'll remind you of this process. Okay? Join the community. We can build together. Join while it's still small, before it goes back up, or before we hit our milestones of 10,000 and 20,000. Join the community. Okay? Every week I'll pop in. Hey, did you add you $105? Even if the market goes flat for the next 10 years, we're adding $105. It's going to go up. We are going to save money together. We are going to have a bigger portfolio in a year. I guarantee it. It is going to happen. Do that for yourself. Build wealth for yourself. Have stability. One more point, and I will end the video. Stability. Going back to the point of the video and putting yourself in the business position. Do not over leverage yourself. Do not overexpose because then you'll make terrible decisions and you will not have stability. You'll lose money and lose money and lose money and then freak out and try and hit a quick win and then you just spiral downward. It's consistent upward that compounds, that keeps going. Eventually, it's a runaway train and now you got too much money you don't know what to do with. Okay? It's a balance. Balance your portfolio. Understand your risks. Stay disciplined. Stay consistent. If you like what I'm hearing, hit the subscribe button, hit the bell icon, comment. Thank you to my man who commented on the last video. Those words were incredibly kind. That touched me. That meant a lot to me. So thank you for that. I really, really appreciate the comments of everyone. Subscribe, and we will check. Hopefully, we will have 10,000 soon. I know we were gonna say at March 31st. I was hoping, but you can't control these things. You cannot control or predict. You can only put yourself in the best position possible. Thank you. I'll see you next time.